Good morning and welcome to today's Trading European Open Live here at the Live Trade Room. Now today is Wednesday the 26th of September and to just let you know kind of what our approach is to trading these financial markets, we're looking to understand what price is doing. So we look to identify what are called high probability trading opportunities. That's where we have a certain approach that we look to apply very consistently, where we look for significant pullbacks or breaks off significant levels of support resistance. That's the type of traders that we are. We're technical traders, and then what we look to do is execute trades in these markets with consistency and certainly discipline with regards to protecting our capital. We're in a process within these market conditions right now, which we are very much looking to reduce risk when we trade these markets, just because of the actual quality of the setups that are being presented. And then when it comes to managing a trade, what we look to do is to cut our losers short as quickly as we can, and we look to let our winners run, and with one aim, and that's to book in consistent returns. So you'll experience the whole trading environment in a very open and honest and transparent way. So just before we begin then, if we could start with our risk warning, of course, please do take a moment to familiarize yourself with the risk warning currently up on screen. And before we begin, it's important to have an understanding of potential market moving news. So again, for this reason, we're going to bring up Forex Factory just on the screen there. And as we scroll through, we don't really have any major news events to deal with for the vast majority of the day. I suppose that towards the end of the trading day for us, we have crude oil inventories, which is expected to be a negative number. There's not always a massive correlation between the number and the price action, but a negative number would perhaps a little bit more recently imply a little bit of support in price for the oil markets, which have been sort of moving to the upside quite consistently. In addition to that, we have major news this evening, and it is the Fed rate announcement. There is a 25 basis point increase in the pipeline this evening, and these times on the left hand side are GMT, or should I say UK time. So do bear that in mind, 7 PM UK time. And then we have the Fed Chair Powell due to deliver his press conference at 7:30. So during this period, the whole world is looking at the Fed in terms of their approach to interest rates, and also additional monetary policy supports which are currently in place. So the whole eyes are really looking at the Fed. As a result, what we ordinarily find is we can have two types of market conditions going into this event. We can either have a move prior to the event where the markets are moving in a certain direction, either to the upside or to the downside prior to the news event, and you may get continuation when the news comes out, or you might get a strong reversal of that move when the news comes out. So be mindful of that. So certainly don't go into any trades. You know, if you get into a few trades today and you're able to book in profit, you know, be satisfied with that. Perhaps not that wise to go in to the to a Fed rate decision and press conference with fairly recently opened trades. The second option really is that we could get a quiet market prior to the news announcement. So we definitely have this news event to deal with today, and it'll be interesting to see which way the market conditions start to develop. So for this, we'll bear that in mind as we look at the euro dollar. And so far there is no real reaction. Okay, we're just opening the European session. It's important to note as well that we're at the upper end of a bit of a range, which is the 1800, and it certainly is looking as if we might get a little bit of a a move towards that level, certainly in the short term. As you can see, it would be looking at a 20 to 30 pip gain at absolute most if we do get prices pushing up to 1800. Be interesting to see whether the prices would actually break the 1800. So it's something to keep an eye on. Moving on to the pound dollar, we're seeing a bit of a pullback off the lows, and we are not really doing an awful lot. We're kind of in the middle between the weekly high of the 32.99 and the weekly low of the 30.54 level. So we're smack bang in the middle of it as things stand. So obviously price action could literally swing in either direction. Looking at the dollar yen, we can see a pretty major double top on here. We're in one of these situations with a few of these markets where if we get a break above the 113.31, then we've got clear directional. We'll have a clear direction in this market, and we're likely to see continuation to the upside. This would represent a really strong structural failure. The bad news is it could provide significant resistance, and we could get this market selling off again. So it just does remain to be seen which way the dollar is going to go. That's the concern. We've already had the move to the downside for the Swiss franc against the US dollar. We might get a little bit more Swiss franc strength, but of course any trades we get into today we don't necessarily want to carry into the Fed statement. The Canadian dollar is another interesting market. As you can see, we're at a decision-making point for the CAD, and what we'll be looking at is this area in here. So we can argue that there's a great opportunity to buy this market. We've got our ascending line just kicking in here. So when you get a pullback to that level, you might get a nice opportunity higher, but we'd also get a really nice opportunity lower as well. So it's worth looking at. And this is one of these situations where we can, if some dollar strength creeps into the market, we can buy it, and if dollar weakness creeps in, we can look to sell it. So we can definitely have both options on the table with regards to the dollar CAD. And just to clarify, we have conditions that would need to be met in order to buy it, and conditions that we need to be met in order to sell it. We wouldn't be looking to buy it and sell it. That we're not sort of flip-flopping in our decision making. We're making a confirmed view on the potential for price to push higher, and also the potential for price to push lower. Aussie dollar, really strange, sort of, obviously a bit of strength creeped in over the Asian session. A lot of that strength has kind of subsided now. You can still see the descending levels, so this is one of these markets that we would still anticipate to move lower. Current price action is not that conducive for that kind of move. Same situation in the New Zealand dollar. It's just coming off these highs and pulling back quite considerably. So that's the New Zealand dollar, and we've got a 50% kind of pullback already in this market, just over the Asian session. The pound, the euro pound is just in the middle, basically, like the pound dollar. We're firmly in between the weekly high and the weekly low, bouncing off Friday's sort of strong bullish move, and with the potential, as you can see today, of the euro just strengthening a little bit, and that very well may be the case. We will keep an eye on a little bit of European strength. The yen is sort of strengthening a little bit against the pound and the euro. As you can see, it's just coming off these highs. And regarding structures, yes, there is a considerable amount of resistance up at these levels. There's also resistance on the way down as well. So just a bit of a kind of a choppy. You could argue some of these trades in both directions. Again, above the 133.13 would be a decent opportunity to buy it. If prices are below this level, then potentially we could get a nice opportunity to sell it. So again, with a lot of these markets, obviously price can determine direction. It could certainly be easier in terms of identifying which direction the market is moving in, rather than sort of getting an explosive move and then running into lots of resistance on the weekly high. That just puts a little bit of a question mark in our minds. Unfortunately, the gold market is just continuing to move sideways, so nothing really to see here just yet, which is a bit of a shame. The oil is looking like it's potentially looking to strengthen again. We are back at this 72.52 level. Yesterday we saw a bit of selling creeping in, really struggling to break above the 72.90 to the upside, but it's struggling to either close or open above the 72.52. So there's clearly resistance around this level. So we can keep a close eye on US oil. Looking at the US equities, there's quite supportive of price. We're seeing these prices just Monday, Tuesday, Wednesday, not an awful lot happening. Very, very tight range, either to the upside or to the downside. Yesterday we saw a little bit of selling coming into the S&P, to the Dow Jones. A lot of it was in the latter part of the trading day. And yet with the Nasdaq market, we saw initially quite a significant selling, kind of in line with the European picture, and then started to reverse quite significantly, and now we're pushing back up to these 75.93. So again, we kind of need to get that clarity with regards to directional bias. If I zoom in on the FTSE market, we've gapped to the upside, which is bullish in its own right, and now we're looking like we're going to try to close this gap. So gap to the upside, and we've started to sell off. Now it's still the case that we still have a bias to the downside below the 74.48. As you can see, we've extended lower, we've sort of went sideways for a while, we've pulled back quite considerably, and now we're back at this level. So if we just break out of this little range and we start breaking lower, it could actually give us a decent opportunity to sell that market. Same situation with the Euro stocks. It's gapped to the upside again, but you can see that the descending level was providing that resistance, and we're selling off, and now we've closed that gap. And again, the 34.04 is a significant level still. So if prices congregate, the thing is, there's not much volume in this little price range here. So really, we'll see if we get a break below that level and see if we can push lower. So that is the Euro stocks. So a bit of a quiet picture today, isn't it, when we look at these markets? US oil above the 72.52. It might be one of these situations where it might be worth just looking for opportunities by looking at the daily time frames and getting that sort of bigger picture view of some of these markets. So normally at this stage we would identify 3, 4, 5 opportunities and look to track them and follow them and conduct multi-time frame analysis at smaller time frames. Today could be one of these days in the build up to the Fed rate decision where we might not get significant moves in either direction. It could be an interesting situation. The euro pound seems to be the only one that's making a bit of a move to the upside. There's only marginal strength in the euro against the dollar and a little bit of weakness against the pound. So I suppose this market is moving in the right direction, I guess, to the upside, but you know, this strength and weakness against the dollar for the euro and the pound could obviously change very quickly, and there's only effectively a 21 pip range between the high and the low, so obviously that could turn around pretty quickly. So we can look for these, we can look for opportunities in these markets. We can see which of these markets are going to be moving in any direction. I wonder if we get a bit of a sell-off off this high. Might be worth looking at a short-term selling opportunity below the 112.72, but I'm really clutching at straws here. Might see a little bit of a selling coming in, especially when we can see a bit of strength against the euro and the pound yen. If nothing much is happening with the dollar pairs, we might start seeing the yen strengthen a little bit. Okay, so nothing overly obvious. If any of you guys have any trade ideas that we could maybe look to capture, so I just posted a little comment there, guys, in your chat box. Do utilize your chat box if you do have any questions, anything we've covered, or if you're seeing anything different to what we're seeing, do let us know. So I'm not even sure what might be the most exciting market for us to even focus on. Maybe the dollar yen. Let's have a look at the dollar yen. So we do have this floor just sitting in at this level. So a breakout below that level would be, give us potential maybe down to these lows down here. So we'll come back to the dollar yen. Nothing happening just yet in the dollar Swiss or the dollar CAD. We're unwinding this move here in the Aussie dollar, but we'd want to see this market turn red for us to get into it. Same situation with the New Zealand. There's a mild opportunity in the dollar, in the euro. See the price actions to the downside, isn't it? And we're running into these levels of so kind of a mixed bag, really. Sort of grinding higher above the descending level, and then this level in here is roughly providing a little bit of resistance. As you can see, it's supporting price to the upside until you get the breakout, and then it becomes a significant level of resistance, and even in the early hours of the morning we had a really strong explosive move off those lows. There was a bit of activity overnight in the Asian session. We saw the Aussie dollar strengthen. Okay, just looking through the news headlines. We do have this sort of backdrop really to the financial markets at the moment. We're in kind of a rate increase environment. There's huge amounts of debt. Inflation is creeping up. Oil prices are significantly high. There's now tensions between the US and a lot of its allies with regards to Iran. The US wants to sanction Iran for their role in the nuclear deal that the US pulled out of, and wanting to obviously restrict the supply of oil, which the Iranians can export, which is obviously probably their main economic driver. And a lot of Europe and Russia, and I think China as well, and a few other big nations have continued to do business with Iran. So clear defiance towards Trump, of course. Which always makes things interesting, and of course we've got obviously issues and tensions in the UK with regards to the Brexit negotiations with Europe. As we know, last week there was news events suggesting that we're likely to see a soft Brexit on the Thursday, and it supported the pound, and then we got a really strong sell-off on the Friday, where Europe came out and said, well, actually it's looking more like a no deal and a hard Brexit at best. So there's obviously a lot of work that needs to be done. You see, this is a counter trend, even a short-term counter trend trade. So yeah, we've extended lower, we've moved sideways, consolidated, and now we're pushing back to the upside. Unfortunately, what we'd like to see ordinarily, like if we're trading these markets, is a little bit of an impulsive move to the upside, and then a pullback to this level, and then look to capitalize on the next move to the upside. So just this by itself is unfortunately kind of not enough for us. We can, it's kind of this sort of upward pressure, really just applying a bit of upward pressure on this market. Actually, if the market could come back to this level back in here, that would be the better place to take this market to the upside. So it's just below the 89.35. So just a lot of these moves have a little bit of they're certainly not as clear cut as they could be. There's a bit of a kind of a channel forming, isn't there, to the downside from a technical perspective. So we're clearly in this downward move. That's why I suppose buying these levels here shouldn't really stack up for us. Because we'd obviously expect this bit of price action here and a bit of resistance to come in, and if that can come back to a level that might give us the breakout to the upside. So we're almost clutching at straws a little bit in today's price action. Maybe we wait for the higher probability move in this market. So I think we can look at the potential for the dollar yen to push lower on a very, very short term basis. The euro pound to potentially push higher. We can look at the yen across the board. We might start seeing a little bit of that's quite interesting. So we might look at a few of these currencies. US oil is just pushing higher. So nothing really going on in the gold market. It's been like that all month towards the end of August, literally till now. So we're just moving sideways. US 500. We really like the US to be kind of in tandem, and there's been a sort of a decoupling. We've seen the S&P and the Dow Jones move lower last couple of days, and we've seen the Nasdaq move higher. And just a choppy gap to the upside in the FTSE market, even though we do expect it lower. But actually the level is the 74.48. That's the level that would be the high probability aspect of that trade. And kind of similar level is the 34.04 in the Euro stocks. So selling off at this moment. It's giving us a slightly clearer picture than the FTSE market. But we'll wait for that high probability trade and see if we get into it. So what we're effectively left with is looking at the yen with a bit of minor European strength. So let's have a look at these. So we can quarter the trade screen. I'll stick the euro pound bottom left. And let's put we'll put the pound yen just in the top right hand corner of the screen. So this market is making that little move lower, and the euro yen can go bottom right hand corner. So look, we've created a bit of a trade plan to keep an eye on. In our daily trade watch, that we posted last night, it was really more of a focus on the Fed and the potential for seeing a lot of volatility, perhaps post the Fed rate decision rather than in the build up to it. But there's clearly identified and identifiable levels in a number of the major US markets to certainly prepare ourselves for a little bit more volatility in these markets. So what I'm going to do is I'm just going to bring this level just down just a touch, and that's the level that we'd be interested in looking for an opportunity to buy. So we need the Aussie, we need the dollar yen to, you could argue there's a lot of consolidation in here, so the break below the 112.73, if we can be patient enough for it, could be a little bit of a rollover to the downside. And it looks like we have similar price action across a number of these markets. So clearly a level of support in here at the 148.29, a break below that. Again, it might be worth waiting for the breakout to arrive and then the pullback and look to get in on that move. That's certainly the safer move. However, the way that these markets are going, they could just sort of do that in a few minutes. So kind of swings and roundabouts really. It's just the breakout trade is marginally the riskier trade. The pullback rate trade is better from a risk management perspective, because you've got a clearly defined high that you could really work with, keeping that risk really short. So if we do get a break to the downside, we might look to capitalize on a pullback. And I'd imagine it's a very similar situation for the yen. So it's just not that clean cut. That's potentially the problem. There's just a considerable amount of doubt in these trades, and if in doubt, we generally look to stay out. But in terms of a trade plan, what we'd like to see is a break lower and then a pullback and then the move to the downside. So that's what we're looking for. Same situation here, break lower, pull back, and then see if we can get the move to the downside. The only thing is we need to be relatively patient for these. A close beneath this level. Again, let's try and see if we get a little bit of a move lower, and if we get a bit of a pullback roughly to that area, then we'll be looking to capitalize on a sell trade. So we're looking to sell the yen pairs, see if a little bit of strength starts to come into the yen. It's in keeping with the daily time frames, because we've been in the yen has been selling off quite considerably, and if we see a significant amount of yen strength creeping into these markets, we might get a short-term rally in the yen. We'd want this market to kind of come back somewhere inside this range in here, and see if we can get into this market from the upside. So what I'll do is I'll just remove this, and somewhere in and around this range here, if we can get involved in a bit of a pullback. So we're only 3 or 4 pips away from that level now, so there's nothing in that pullback. In fact, we'd almost want to extend up to the 89.50 level and then pull back to the 89.35, and at least it gives us a bit of profit before we get back up to the 89.50 level. So it's just about having a plan when you trade these markets and knowing what you'd like to do, and giving these markets plenty of opportunity and time to do it. So today might be one of these days where it's a strong focus on patience. See if we get the moves that we're looking for. Good morning, Connor. I hope you're doing. Okay, so they've changed the saying now. It's no longer swings and roundabouts. It's about Trump and Brexits. Yeah, that's quite apt, really, isn't it? Just to reiterate, when we approach these markets, we want to assess market conditions and then have a directional bias. And the market conditions are what we would regard as being generally quite choppy, quite erratic, I think is probably a good summation. But most importantly, there is a distinct lack of clarity and direction in some of these trades. And that, of course, is a concern for the sort of the way that we look to trade these financial markets. So, as a result, what you can do very, very easily is force a few trades. You can become so inactive that you're actually, you're taking trades for the sake of it, and really, it's probably a good opportunity to fine-tune what type of trader you are and the type of setups that you look for. And unfortunately, if you don't get the exact setup that you're looking for, maybe reframe and apply that patience, which is very much important. And then when we do get the conditions that do fit, then we can look to get into these markets. And get into multiple trades and scale ourselves into a bigger position and mitigate losses and become risk free when we trade, and then focus exclusively on the profit side of each trade. We haven't really had any of those opportunities over the last 1 or 2 days over the last few weeks. So definitely challenging environments right now. We have the midterm elections coming up in the US. We also have Brexit negotiations continuing. You look at the price of oil, it's increasing to the upside. You look at gold and it's not doing anything, which is a bit strange in itself, because there's a lot of, normally gold is a bit of a flight to safety, but there is this risk-on approach, which doesn't sort of make an awful lot of sense in terms of increasing rates, increasing the cost of debt. Yeah, we know why the Fed need to increase their interest rates. We've got very, very low unemployment rates, which are obviously really good. Spending is really good. Consumer confidence is really high. Business confidence is high. So So yeah, there's a lot of these it's a very, very interesting environment right now. I mean, I don't think there's much doubt that we'll be getting explosive moves in certain markets, you know, in the not too distant future. So it's just a bit unclear in terms of which markets they could be right now. You could see the dollar actually going both ways. It could end up strengthening once more, or we could obviously get a considerable amount of weakness starting to creep into the US dollar. And like, if we look at the, if I just share this chart with you, the 1800 or the 1.1800 level is a really strong level of resistance. You can see we need to go back to sort of April of this year. We've kind of been in a bit of a sideways pattern. That was the last time we were above this level, and this would constitute a structural failure back to the upside, and you can see it on the weekly time frame as well. So not quite a head and shoulders, but we have extended a little bit lower for that, because you want to see symmetry with the head and shoulders. But you know, a break above the 118, you'd be seeing this market at least push up to these kind of levels up here, the 2043 level. So it would represent potentially a nice move to the upside, but most importantly, it would represent a structural failure to the upside, and that's what the markets would be really looking for. We've previously, in, was it April? Yeah, towards the end of April, we saw a structural failure to the downside, gave us loads of fantastic opportunities there for a few months, and then we've gone into this sideways moving pattern, and a break above the 11800 represents a reversal of this downward moving market. We'd be looking for opportunities to buy this and see if we can squeeze it to the upside. Yeah, thanks, Connor. Cheers for that. In fact, let's do a quick review. So our trade plan is as so. We're looking for price action to just conform with a bit of an overall view, really. We prefer to get into the pullbacks on these markets rather than the breakouts. Same with the euro pound. We'd like it to sort of push a bit higher if possible and then pull back to the 89.35. Elsewhere, not an awful lot going on. I'll do just a quick review before we switch over to the live trade room. And those of you that are perhaps with us this morning, please do read the information just below this video. We're currently offering a 14-day free trial, and you might want to take us up on that. So nothing really happening for the euro dollar. The pound dollar, as you can see, we're just kind of reversing off these highs. Dollar strengthening just a little bit. But that's probably a little bit more pound weakness than anything. So the dollar's definitely sort of rejecting those highs, and we might still get these rollovers to the downside. So we're pushing higher. We'd like it to push up just a little bit more, and then capitalize on a bit of a pullback. Let's see if we can get into that. The yen is strengthening ever so mildly. So the only two markets really, let's have a look at the euro pound again. So we are clearly getting a little bit of pound weakness. So we might look to add this market to our Okay, so a structural failure. So again, a pullback to roughly this level in here, the 31.67 might give us an opportunity to take it to the downside. So we might come back to the euro dollar. And just looking at the commodity markets, gold moving sideways, oil not really looking like it's going to move above that 72.52 level. That's quite important. A bit of sort of mild strength in the US equities. The Nasdaq is clearly the one that has a more bullish technical view on this market, squeezing up to these levels. So a trade might exist there. FTSE is just strengthening a little bit again, and we do like the Euro Stoxx still to the downside, believe it or not, but we're not really getting any particular follow through just as yet. So okay, we've got a number of markets then. To focus on, and what we're going to add is we're going to add the pound dollar to this just the bottom left hand side, so we're keeping a little bit of an eye on the euro pound, and also if we get a pullback to 31.67, we'll look to get into it to the downside there or thereabouts, and I'm sure we probably will get opportunities to get into it, but so far all we're seeing is a sort of very mild little bit of pound weakness beginning to creep in. Yeah, New Zealand Swiss, just to have a look at this, New Zealand Swiss. So the Swiss is selling off just a little bit against the dollar. The only problem we have is the New Zealand was strong and is now becoming really quite weak. So it would be looking at two slightly weak currencies just as things stand, and of course that could change very, very quickly indeed. That's been a horrible market over the last few days, well, last few weeks should I say. So yeah, let's have a look at the New Zealand Swiss market, and we will be switching across to the live trade room now, guys. Apologies. So you can see that the strong kind of pullback in the Swiss. A structural failure at 64.32. Yeah, to the downside, are you referring to, to watch a push higher and structural failure? We're seeing the structural failure to the downside, unless I zoom out. Okay, so I see what you mean. So this is a structural push to the upside. We're seeing just quite a strong pullback, really. We do have these levels just sitting in here. So yeah, there could be an argument to look for an opportunity to buy it, but we do need to see the New Zealand dollar just strengthen a little bit. It was strong, as you can see, over the course of the Asian session. Really spiked up highly to the upside, then started to roll over to the downside. So we're looking to close the gap as well, so we're not too far away from that. So again, it's just one of those sort of markets that we're just a little bit not that excited about, I'm afraid. You know, it's a tough one. We can obviously only trade what we see and what fits with our analysis and things like that. And for whatever reason, what what we'd be looking to do is to identify an opportunity and to get the market conditions right, get the directional bias correct, have an understanding of the actual trade itself. Are we breaking out? Are we pulling back? Do we get a strong positive risk reward? We're looking to stack all of these in our favor. Do we have our directional bias on that market on a bigger time frame? Does the smaller time frames conform with that trade? Could we use an indicator that makes things a bit easier? Whatever the case may be, what you can end up with is a bit of a no-brainer. Yeah, let's get in and trade that market. We're just getting sort of that. What we're seeing is, yes, there's some good aspects to the trade, but there's a couple of areas that cause us a little bit of concern, and we're just left with this little sort of question mark over the trade. And obviously situations like that are not good or productive. And it's better to obviously protect your capital, and if you get into a trade, look to, there'll be much better opportunities, fast moving markets which are explosive in direction and almost free flowing. Those times will come. We just need to err on the side of caution really, and just wait for the high probability opportunities to arrive. And when we get them, we'll look to jump into them. So we do have a few markets here to look at. We've got the yen pairs, which we might see start to strengthen. The yen might strengthen a little bit over the course of the day, certainly in the build up to the Fed rate decision. And the pound looks like it's interested in selling off a little bit, so we might capitalize on a bit of a pullback in the pound. Okay then, guys, so that just about concludes this session through our YouTube channel. So please do feel free to read the information below. If you can subscribe to our channel and give us a thumbs up, that would be great. And you can also connect with us through our Facebook, Instagram, Twitter and LinkedIn. And we're currently offering a 2-week free trial, so if you do want to access over 76 live trade rooms per month, then please do take us up on the offer. And then if you decide to join us, you're only looking at a fee of $9.99 per calendar month, so hopefully you will find it incredible value. Okay, thank you very much for joining us as always, guys. Do take care. We're switching over to the Live Trade Room now. So from everyone here at the Live Trade Room, do take care. We'll speak to you soon. Bye for now.